Elle, how are you doing? I hope you're having a good night. Okay, so let's go over the two problems that you were having trouble with, exercise 5-07 and DE 6-03. We'll take a look right now. We're looking at 5-07, okay, and we'll check out what you've done and where we can do better on that. Okay, so I put up our instructions here, and we're purchasing, and we're doing the journal entries for our company. Okay, so we're Lily and we're buying stuff. So we purchased $36,000 of merchandise from Shell with the terms 110 net 30. You did right, taking out that 1% because we have that as 110 net 30. So your inventory amount is correct, and you're right that we're getting inventory, but we're actually buying something and we're buying it on credit. So we won't have cost of goods sold because cost of goods sold is something that the company that's selling the goods is doing. So if we're buying something and we're buying on credit, looking at our chart of accounts, which account do we think is probably going to be most appropriate? Right here. It's the accounts payable because we're buying something on account. If we're buying something for cash, we debit inventory and we'd credit cash. Okay, so here we just want to debit our payable account to show that we owe something. Over here, this is just telling you put something in so that it's an equity account, but really now that we know it's a liability, you'll know to be able to change that. Okay, so now the second one says that we paid the amount owed on the invoice within the discount payment. What that's really telling us is the amount that we owe, which is that's $35,640 right here, we're paying it now. Okay, so when we first did our entry, we debited inventory, we credited accounts payable. So now we're going to pay on that. So what are we going to do? We want to reduce our payable, right? And you're right that it was a payable, but we used accounts payable before, so we want to use accounts payable again. We only use a note payable if we're going to actually issue a note that's going to have interest, and it's a much more formal document, and it's usually for big ticket items or equipment or something like that. So that's where we're going to want to debit. And our dollar amount, because we're paying our invoice, it just means we're paying what we owe. So that will be this $35,640 here. Okay, so now we discovered that $9,000 of our merchandise that we purchased was defective, and so we're going to return it and we're going to get a credit. Okay, and that's, we've seen that happen before. You've had to return stuff. I've had to return stuff. So when we return stuff on credit, first of all, we're going to be sending the goods back. Okay, so if we're reducing inventory, that means we're going to credit, right? And they tell us it's $9,000, but we took that 10% discount, so that means we're only doing 90% of that, okay, or 99% of that. Sorry about that 1%. So we take that 9% and we subtract out the 1% that we did for the discount. Okay, so we know we're going to reduce inventory, but then what is our other item? If we're getting credit, really what happens in these situations, we could say we're getting a payable because the company is going to be paying us money. But in reality, what happens is we get to reduce our accounts payable because that means that when we buy something later on, they're just going to subtract it from our payable. So in actuality, we have an accounts payable credit, okay, which actually ends up being a debit because it's the opposite, okay? And I know that's confusing, but, trust me on that one, okay? So then we purchase more because we have to get, we have to get new items because we had to send some back. You're right here that we are going to, wait a minute, what did I did? We purchased 5,000. Oh, okay, so that's not right. So we purchased 5,000. This actually is kind of reversed here. We want to debit the inventory because we're now getting it, okay, just like we did up here, because it's really the same kind of transaction. We're purchasing inventory and we're doing it on credit, okay? So we want our transaction to look just like it does here, except with a different dollar amount. So you want to do the same thing you did up here in this very first transaction, but do it with this particular dollar amount. Okay. And then, but it's for 5,000. This one doesn't tell us that there's a net of anything. It just says net 30. There's no 110. So that means we don't get a discount on it. Okay, so forget that little 1% discount that you took out. And then finally, this last one, we're going to get a refund. And we get, you're right about the cash, you're right about the dollar amount. But here, remember when we got that credit, we debited accounts payable. So we want to just credit that to get rid of the accounts payable. And it makes more sense if you do, T accounts, and then it turns out to be 0 at the end. But that's kind of how that's done. So I hope that makes a little bit better sense for you. And then once you get those accounts, you can, do those over here. Okay, let's move to this one. 6-03. Okay, this one looks confusing, and the reason it looks confusing is because they want you to go back to this dynamic exhibit. Okay, and so they tell you when the number of units sold is on November 21st is 36, what's the cost of goods sold? They actually give you the answer here. They just want you to go to this little dynamic exhibit. So we click on that and we go to this page and click next. And we can click on that. Excuse me. So it tells us, here we've got this little sliding scale right here. See how this slides where I have my cursor? And this is for different purchasing or selling amounts. So here we are going to sell 36 units, just like it asked for on the previous page. Oh, here, you know what? I'm going to do this because it just makes it easier to see. Okay, so it says 36 items. So here we just look and we go to 36 items. And so we see that the cost of merchandise sold, see this down here in A? They tell us it's 232. So that's what you'll put right here. And then right here, when it tells you in part 2, the number of units sold is 36, what's the ending inventory? So here we look at our 36 again. They tell us the ending inventory is 308. And that's just what we do with each of the ones. The next one, they tell us it's 8. So if we go to this exhibit again and we go over here and we click on the 8 right there, it moves and it changes all the numbers. And then you can just see there. That's what they're doing. Here, the cost of merchandise is $40. Cost of merchandise sold is $40. The ending inventory is $500. If we move it to 10, we see that our cost of merchandise sold is $50. Our inventory is at $490. This is actually kind of fun to play with. If you want to just kind of see the relationships. I actually usually set it up in Excel and play with it that way, but I'm old. I used to do these on worksheets, and by hand. You probably remember that kind of stuff where we actually wrote something out on paper with pencils and erasers. And now we just do little clicks and they do the same thing. But it's kind of a cool little deal here. Peyton. Sorry, that's Peyton. Anyway, so that is those two problems. If you have any other questions, feel free to let me know. I'm happy to, walk through those with you again. And I hope I didn't confuse you too much with, let's go back to this one over here. Go to the large, well, let's go to the preview here. We'll go back to this one again. Just remember that we're looking at it from our company. We're the ones buying. We're the ones giving back inventory. We have accounts payable. We have cash. We have inventory. That type of thing. So those are the kind of accounts that we want. I hope that makes sense. If it doesn't, drop me an email real quick and I'll help you out. But I hope you enjoy this and I hope you found it helpful and you have a good night. Thanks. Bye.